Hello everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a fantastic day. Happy Wednesday to you. We're taking a look, of course, here at Bitcoin, seeing what's going on, helping understand you, impart you with best practice and big picture, right? I love teaching people to trade, so I hope that you can learn something today. Of course, I'm not a financial advisor, but I do have a website where you can register to become a community member, where you can learn from my trading academy. I've had a lot of graduates recently, awesome experience. But more importantly, too, I also send out signals for every trade that I take, so you can learn how to structure your trades effectively. And we have specific strategies based on certain times of the year and obviously what kind of markets we're in right now. We're still mostly bearish, so it's kind of a different strategy than a typical bullish strategy. And you'll learn more about that if you join. Also, keep in mind, I'm recently affiliated with BitGet. I can tell you that it is a fantastic exchange. I truly do love working with them, but also their exchange is much better than ByBit, and that's ByBit. I was using ByBit for a very long time. But the great thing is you can use futures in the US without a VPN. That's a big bonus. A lot of folks don't know that. So go and get registered there, and also keep in mind too, you can transfer a lot of additional funds. They give you some bonuses there. Just keep in mind that that bonus is based on trading volume. So the more you trade, the more likely you are to receive that. Okay, just keep that in mind. All right. So Bitcoin, here's where we're at. First of all, we're kind of stuck in this weird little spot right now. In other words, we got some significant retracement yesterday. Obviously, you know that somewhere in the range of 12.5%, 13% in one trading day based on CPI data being higher than it should have been. That's unfortunate. All well and good though. That's just kind of how that goes. You pick up the pieces and you move on, right? So a lot of profits were taken and a lot of gaps were filled, for lack of better terms. And unfortunately, the bears got really fat and sassy yesterday. So here's the thing: is it going to continue to recover, or is it going to keep going down? I get that question a lot right now. And in that sense, what we want to look at is some key level supports. Great news is 19,800, roughly 19,850, was a price in which the point came down, or the lowest point in which the price came down yesterday and bounced. Right now, previously, we've already established this 19,800 as a key level support based on previous resistance levels back in 2020. Okay, so that should hold as a pretty strong support level. So what I'm expecting to see here is the price to possibly wick down one more time and to come back up from there. I think the likelihood of the price increasing versus decreasing seems higher. Again, it's very subtle. It's like a 51.49. But on the same accord, what we want to look at is smaller time frames to identify what the midterm and the short term looks like, and that will help us understand what might happen on the macro. But the macro is definitely still bearish, so try not to think that we're all set and good to go. Right? There's a lot of things that need to happen. So first of all, we're underneath 50 on the RSI. While this is tentative and we've only been down there for one day, that could potentially work as a resistance level. Now, there have been times in the past where it wicks down and wicks back up, so we could very well experience that being a non-existent factor. But for now, we got to recognize that 50 on the RSI could be a resistance level, which implies that if you're going to take a long position, you want to have some pretty tight profit targets, maybe 20,500, 20,700, something along those lines, where you can get filled and get in and get out, right? Again, that's if you choose to go long. There could be some short opportunities as well. Taking a look here, of course, at the MACD, this kind of just telling us that the bears are gaining control and the bulls are losing control. So not a heck of a lot to extract there. The other thing else we want to kind of take a look at would be the moving averages and kind of see that we are below the 50 once more, and of course, testing the 20. Okay, so those are not the most impactful indicators or moving averages that you want to rely on. So to me, this really doesn't help us a lot. I would just say, generally speaking, the macro is still bearish. That's a great way to summarize it based on what we've seen so far. Good news is we can see a tremendous amount of volume here accumulation at this price point, and it's definitely looking good. You can see this larger volume spike here with a doji candle. That pretty much implies that the bears are losing control, and the price action might come down a little bit lower before it comes back up. So I would say, again, 19,800 might actually be a realistic price point in which the price might retest. Let's go ahead and take a look at, of course, the RSI and kind of see where we're at. We didn't get a bounce off 30, but we almost did in a sense. In other words, you come this close to 30 on the RSI, it needs some time to relax and go sideways. So as the price goes sideways, if it were to, just say for example, the RSI will slowly start coming back up, right? Because it's giving us that relative strength index the last 14 candlesticks. So in this sense, we can see the price action going sideways where it comes up, and that would essentially be a bearish type of situation because it could inevitably bounce off of the 50 and come down. Okay, so what we truly do want is for the price action not to go sideways, maybe come down a little bit further, bounce off 19.8, and effectively give us that bounce off 30 on the RSI and continue higher. That'd be much better. Again, you can't always get what you want, right? But we can certainly hope and wish and pray that it happens. So taking a look at the MACD, we can see it's starting to lose its momentum, of course. This is kind of a natural thing that occurs with the moving averages here, and really not telling us a tremendous amount, just letting us know that the bears are losing control because the price action, of course, is going sideways. Obviously, that isn't really super telling, right? So what is telling to me is basically just the fact that we're going sideways at this price point where we've had a lot of volume accumulation in the past. So we take a look at the volume. 19,800 has the most amount of volume. Now, granted, I expected somewhere in the range of 21,600 to hold as a support level, and it just blasted straight through. But that was a fundamental catalyst. Hadn't we had CPI data, or just say it came back neutral or positive, we should have very well seen a bounce off of that key level support, which was based on volume. But we have a tremendous amount more volume at 19,800, so all the more reason to potentially consider that to be the bottom in the immediate future. Yes, there is potential for the price action to come down and lower than that. I'm not saying that it won't happen. But again, the likelihood is fairly low considering how much volume we see at that price point, right? Again, a decent amount of volume. We lost our previous support here in the 21.6 range, but we have this one to rely on. So again, I would say it's a sentiment or a consolation that we have here for the situation that we're in. Excuse me. All right, very last thing we want to summarize here with is the TD sequential, kind of see where we're at on the 9. And of course, big surprise, came down to a 9, consolidated sideways ever since. Getting a lot of resets, pretty much doesn't matter too much, just kind of letting us know that, hey, we hit that exhaustive state and the price didn't want to go any further. Now, it's very common for a second dump to occur, of course, to hit a 9 to the downside once you've had your first 9. That can happen a lot in crypto. But hypothetically, it shouldn't happen. We should experience the price action to increase now that we're building a base of volume at a key level support. Moving forward as well, the last thing we also want to take a look at here is the potential for a short position. Now, what I say by potential isn't that you want to take a short. It's that if you have a short position open, you should probably close it soon unless the price action dumps immediately. In other words, a cloud is basically telling us here that, yes, while we are well below the cloud and we saw this significant gap, that's neither here nor there. That doesn't necessarily imply that a long position is viable. But it furthermore reiterates the fact that we are still bearish in the macro, right? The midterm and the larger time frames is telling us we're bearish. But on the 1 hour, what it is telling us here is that the lagging span is going to intersect with the price action soon. This guy right here. And that is giving us an indication of potentially close our short position, right? Same thing with the conversion line. Once this comes back up above the baseline, we should have that natural convergence, so to speak, where the price action should come up from there. So we're on the precipice of the price action increasing, but once again, it probably needs to consolidate for a little bit longer. The one thing we want to touch on too here is that traditional markets are up. This is a fantastic sign in a lot of ways because that green to recover the market from yesterday. I mean, we saw a 6% correction from NASDAQ. That doesn't happen too often. It happens only once in a little while. We can see that this recovery here is going to be a positive thing. Okay, so hypothetically, we can get a little bit more green on the traditional markets. I think Bitcoin will, continue to maintain itself at a higher price point. But all in all, that's kind of where we're at there. I would say, again, it's not extreme, but there's a little bit more likelihood the price is going to increase from here than it would to decrease, right? Because again, most of what happened yesterday was fundamental plus just taking some profits based on the fact that we are overextended. Shouldn't have happened, honestly. Without CPI data being so terrible, we probably should have seen a bounce off 21.6 or just a continuation further. We had all the signs for that. So basically just means we hit the big old reset button again, as we've done many times in the past, and we'll just go ahead and try to lick our wounds and get through this, right? So to my community members, make sure that you position size effectively, right? Because yes, we hit our profit targets on our long position day before yesterday, before that dump. But if you had taken a large position, you might still have to hold on to that for a lot longer, have some liquidation issues because of the fact that it did come down as far as it did, right? Those things do happen sometimes. So it's all well and good. Try not to dwell on it, so to speak. But at this point, I think we're in decent shape to see a long position take place. Just make sure your profit targets are fairly tight and you work within your risk tolerance. Okay. Again, all the most important things you want to kind of try to think of. Because at the end of the day, this is your trade, this is everything should be on you, and you got to make sure to learn from your mistakes if you're making them. I learn all the time, and I can tell you what, every single day is a new learning opportunity, right? All right, anyways, enough about that. Thank you so much for joining me here. Once again, if you want to become a better trader, cryptocash.tech is a site. Link in the description below, and obviously make sure you consider actually using BitGet as an exchange. It's a fantastic exchange, tremendously better in my opinion than ByBit, and you don't need a VPN in the United States. It's straight leverage, and you have the option to do that if you want. Of course, there's spot as well, but generally speaking, it's a very, very positive thing, and I really like it. That being said, I hope you have a great rest of your day. Thank you so much for your time. We'll see you in the next one.